I think hope and fear is a very good place to start. And as I've mentioned earlier, nobody likes to buy insurance. But these days, there is many ways you can actually, finance a insurance policy. We have got premium financing, we've got multi-pay. Banks are very willing to say, look, give it to me as a collateral. I'll let you have the money to actually do it. So this now becomes a business solution. You just want to make sure that you strengthen your position, right?
And as Ray's mentioned, in the high net worth world, insurance nearly always has an immediate value, and it's just you've bought time.
And that's how the dead man can talk from the grave,
That's
right?
That's right. That's
Exactly.
right. We are not here to sell. We are here to provide options.
Of the Grandtag podcast, conversations on wealth and legacy. Welcome back to the Grandtag podcast, conversations on wealth and legacy. We've all heard the saying, shirt sleeves to shirt sleeves in 3 generations. In Asia, we often call it the 3-generation curse,富不过三代. The idea that wealth is created by the first generation, preserved by the second, and lost by the third. But is that really inevitable? And in today's world of sophisticated planning tools and advisory expertise, why does it still happen? To explore this, I'm joined by 2 leaders who work closely with entrepreneurial families and next-generation wealth stewards here in Singapore. First, Christopher Albrecht. Chris brings over 25 years of experience across high net worth banking, insurance, and brokerage. He's held senior roles across organizations including HSBC Insurance, Swiss Life, and Old Mutual International, and has worked extensively across Singapore and Hong Kong. That cross-border experience gives him a unique perspective on how legacy planning challenges show up across Asia. And joining him is Ray Ang, CEO of Grandtag Financial Consultancy Singapore. Ray has spent his career at the intersection of wealth structuring, liquidity planning, and legacy solutions. Previously holding leadership roles at Charles Monat and IPG Howden, where he worked closely with private banks, family offices, and professional advisors. His experience spans investment banking to structured insurance solutions, making him deeply familiar with both the technical and human sides of wealth transition. Chris, Ray, welcome to the show.
Thanks for having me.
So, Ray, we know that wealth can disappear. And in my family history, I've seen that play out. And so we know that this isn't just theory. Ray, can you demystify this for us, please?
Well, Barbara, like what you say, there is this 3-generational curse whereby people always say it's like富不过三代, right? And I think this is a topic that I'm actually very passionate about. You have actually shared that, it happened in your family as well.
Yes.
Could you actually briefly share something about that and how things can actually be done differently?
So my paternal grandfather, without going into much details, and not to shame them because,
Right.
I'm not where I am right now
Right.
if it weren't for them. So paternal grandfather and his father built a business, those LPG tanks. They were practically the one and only brand that the city knows, and they're monopolizing it eventually. When it came to my father, he wasn't prepared. And I think, Ray, I heard you mention before, when this happens, it is the final symptom. So how do we, expound more on this so that our viewers can learn from it?
Thanks for sharing, your own example. And I think that, the reason why I'm actually very passionate about this topic is because we have actually seen many of such situations happening, right? And I would like to actually go a little bit deeper on this, right? All the people that we meet, the wealthy clients that we meet, many of them didn't get there by chance. They struggle, they work hard, right? And I wouldn't say that these people enjoy the struggle, right? I mean, the thing is that most of the time when we are going through our struggle, what do we think of? I'm going to make sure that my next generation don't suffer the same, amount as I do,
Yes.
right? And that desire is something that is actually very strong. Now, we know that, diamonds are actually formed because of all the pressure and all that kind of stuff. Now, giving the next generation a good life, which is what everybody desire, doesn't necessarily make things good in the long run,
Yes.
right? So the typical situation is one whereby, the first generation creates the wealth, the second generation try to preserve it, and then the third generation has got no clue. What do I do now?
But they enjoyed it so much
Precisely.
without knowing what
Precisely.
is actually being lost in the
Precisely.
process.
And it's not their fault, right? And that's the reason why we always say that, hey, look, it's always good to be prepared. It's always good to have that strategic intent
Yeah.
to see whether how do you actually go on making sure that the wealth grows instead of depleting, over time,
Correct.
right? And I'm sure, Chris will be able to share a lot of example as well.
For sure, for sure. And I think one of the key things here is this issue is universal.
Mm.
It's not any particular geography or demographic. And the problem is one of human nature. The first generation, they make the money by being entrepreneurs. They know the value of a dollar. They're very, very value driven. They go through, as Ray said, the really hard times.
Yes.
When the second generation take over, they saw their parents struggle. They know what it took to build that wealth, which is why generally they're very good custodians of that money.
That's right.
Gen 3 grow up in comfort.
Yes.
They get told some of the stories, but they never lived it. They never experienced it. So
Correct.
therefore, they don't have the same value set. And for them, they're growing up in comfort. They think it's almost a birthright, and therefore they spend that money. And by the time Gen 4 arrives, the money's gone.
Hmm. Well, Chris, you have a very unique vantage point.
Mm.
In your opinion, is this an Asian culture problem or is this a universal concern?
It's really universal. I think where I would bring Asia into the equation here is that in a lot of Asian countries, we're only really now coming into multi-generational wealth. If we look at the rise of China, a lot of first generation wealth, quite a bit of second gen, but not so many third. And I think this conversation's very important to have right now because it's something that's been happening in Europe and the US for hundreds of years. And now Asia's finding itself with a lot of money in these multi-generational families. And this third generation curse is really starting to show itself.
When it comes to this perspective, are you now saying that it is not really a cultural problem, but more of a communication problem?
Definitely. As I mentioned, it's human nature and humans are human. Yes, we can say cultures differ around the world, but just that perspective of seeing, having that first generation struggle, second generation see it and live through it, third gen don't. That's universal. It doesn't matter where you live.
I see. So when it comes to communication, more of just cultural issue, Ray, we have family offices, private bankers, trust structures. We have more tools than ever before. I mean, during my father's and grandfather's time, they don't have all of these tools and they don't talk about all these things because it's not in existence. So with all these now in place, why this is still happening?
Well, Barbara, that's a very good question, right? I think that if we really look at what we have right now, is that we are starting to have a ecosystem, family offices, trusts, instrument like, for example, life insurance. These are all very good tools. But let's bring it back 10, 20 years ago, right? Whereby people don't really talk about life insurance. People don't talk about death, right? It's a taboo to actually talk about this. And in fact, the thing is that, in the Asia context, you have got this filial piety thing. And then the thing is that, people will always say that, hey, look, let's not talk to our elders about these things, right?
Yeah,
are you cursing
much.
them? Are you trying to, what kind of ill intent do you have? So it is a lot of time perceived as an ill intent, right? But if you actually look at what we are trying to do right now, we're trying to actually put it into a frame whereby, no, you're not trying to, have that bad intention to say that, look, please die so that we will be able to inherit something quicker, right? I think it is a lot about what are we going to do collectively? Because we all know that in a family, there's a lot of different dynamics. There's a lot of different interests. Not that they are bad, but we have become a lot more encompassing. We allow people to pursue their own dreams. We allow people to pursue their own interests. So if you are not someone that is really very interested in a family business that is thriving, then why do I actually want to force this person to be in the family business? Right?
Yeah.
We will create enough opportunity for them to go pursue their interests, yet at the same time, making sure that the family wealth is well managed. Right? So these are the kind of ecosystem that we have right now. So going forward, I believe that, wealth can actually be preserved. In fact, the thing is that wealth can actually be multiplied, right? If we know how to actually use the right tools.
Yeah, and isn't that great? But Chris, more
Ray
perspectives on this.
made a couple of really good points in there. The first one I would think about is the tools might be there, but if the families don't know the tools exist, they're not going to use them. So you mentioned about communication. Now there's communication within the family. There's also communication with advisors. If you don't get the right advice, you don't know those tools exist. The second bit that Ray raised, and I want to just put my own spin on this, is control aspects. So control and acknowledgement that there's a problem. I've seen situations with families whereby Gen 1 have made the money and they retain a vice-like grip on everything. And if generations 2 and 3 go to grandma and grandpa and say, hey, have you heard about this thing called a trust, or have you thought about insurance?
Yeah.
Oh my goodness, that can go really badly wrong because Gen 1 doesn't want to hear it.
Yeah.
And I think, so the final point there is, if the family don't acknowledge the potential that there's a problem, they're not going to look for solutions to fix it.
I know that your firm has done extensive surveys and studies. How do you think that the advisors, even with the tight grip and even with the being not open to all these talks or family discussions, how do you think we should position insurance to be a more accepted tool in family planning?
It's education. When it comes to these slightly older clients, they're very stuck in their ways. I think the expression is you can lead a horse to water, but you can't make it drink. So all we can do is share and share and share. And doing a podcast like this is one way in which we can get that message out. You're absolutely right. There are bankers who have great relationships with these clients, the family lawyer, the brokers. There's so many sources of information. And sometimes you just need to keep repeating the message. And then mainly at the end, someone will listen.
Well, maybe one of you can share a story wherein, you were able to make the client have acceptance and make insurance fit in the family discussion and not see it as a discipline tool. Yeah, because in the old days, that's how they see it, right? Control, tighten.
Barbara, we see that, so often, right? I'm able to quote you examples so quickly, so easily, right? In Asia itself, it's still very much a patriarchal, kind of, culture whereby you have got the elder, you have got most of the time the patriarch or the matriarch that is actually in control, right? And you know what doesn't help? These days we're living longer. So you have got, these people who are in their 70s, they're in their 80s, they're saying that, hey, look, I still want to be in control. And the next generation are fast approaching their 50s, their 60s, right? Now, if these people don't get the opportunity to learn, to manage, to make mistakes, to have some wins, then it's going to be very difficult for all these experiences, all these wealth management experiences to be passed on.
Yeah.
Right? So these days, these are the kind of things that we are seeing. But we have also seen a lot of younger generation, sometimes not even the second generation, but the third generation, the younger ones, saying, hey, wait a minute, this can't be the case, right? Because things are changing. And if we don't plan, then effectively we're leaving things to chance, right? And these people are taking on that leadership role to say that, hey, let's bring everybody together. Let's hear everybody's thought and see what should we do about, the family wealth, right? And there are a lot of, proven theories, not exactly theories, but, things that works. Like, for example, the Rockefeller's waterfall method, which I thought was fantastic, right? I mean, the thing is that this is one system whereby you are kind of like, creating a family bank, right? And in fact, the thing is that the families are never going to see a day whereby you get a waterfall that is dried up. And that's the reason why I'm guessing that is actually called a waterfall method, because the amount of, water in that pool is in fact never ending. It's always going to be there. And it's a question of whether how you draw on it and how you actually create more, by putting into that pool itself.
Yeah.
Right?
Chris, there's no better person to explain the waterfall method.
For sure. And it's something that I think has been used for many years. It's got a name.
That's
and when you
right.
name something, it becomes a little bit more formalized.
That's right.
I think the easiest way to think about this is if we look at any multi-generational family where you have an original wealth generator, and then you have Gen 2 and then Gen 3. Every generation that comes along is adding more mouths to feed from this central source of money, and it's exponential. You need to increase the amount of money. So therefore, one of the ways you can do that is that the oldest generation at any given point insure their lives using any form of life insurance. And when they pass away, the benefits from that life insurance pass back into, as Rose called it, the family bank. Now, that could be a trust, it could be a foundation, could be anything. But that money goes back in. So every generation that passes away, the next gen, they get insured. So what you're always doing is when the oldest generation passes away, more money is coming back into that central source. So even though there are more and more people taking money out, there's more and more money being generated. And it could be from the family business, but more often than not, the insurance tops it up.
That's very simply put, very understandable. And of course, with all these well-meaning business owning families, when they do this, usually not everything that you plan will go accordingly. So usually, where do you see the cracks that start to happen?
I was going to brace this in a moment ago, because you asked about how can you get these families to listen, and you mentioned about business. And I think in our world, most of our clients are business owners. I think very rarely in our world are our clients employees of someone else. They're normally employers. And the family business is usually anywhere between 70, 80, 90% of the family's wealth. And one of the things that's really taken me by surprise is when you talk to a business founder, they think they've set the business up really solidly, to the extent that they say, well, look, if I did get hit by the metaphorical bus tomorrow, everything would just continue as it is. It would be fine.
Because they set it up so
because they
fantastically
think they've set it up so well.
in their mind.
Now, what you now need to do is bring in an objective third party to do an assessment of the business and say, here's what the business is worth today, and here's what the business would be worth if something happened to the founder. I think the other thing that's probably quite common in our client bases is those businesses tend to be private. They tend not to be listed. So the business tends to be worth what someone will pay for it. And that value is often derived by the people who run it. So if the patriarch, the founder, passes away, you could see a serious impact on the value of that business. So if you now say to the business owner, hey, look, this is third-party data. We're not trying to sell you here. It's fact. If something happens to you, this is what will happen to the business. And a really simple way to offset that is by insuring your life, and the company in some situations can buy that insurance. Now, from the perspective of the business owner, the founder, it becomes more transactional. It becomes more of it's a business planning decision. You're not trying to persuade them that they have a problem or the family has a problem. Now it's a business problem, and they're used to solving business problems. So that's one way in which you can make this work.
Okay.
I like this point. In fact, the thing is that, like what you said, most of the people that we deal with are business owners, right? And as I've mentioned earlier, nobody likes to buy insurance. But these days, there's many ways you can actually, finance a insurance policy. We have got premium financing, we've got multi-pay. Banks are very willing to say, look, give it to me as a collateral. I'll let you have the money to actually do it. So this now becomes a business solution. And, like what you have rightfully pointed out, a lot of times this is not about, the problem, there is problem with the business whatsoever. But you just want to make sure that you strengthen your position, right? You don't want to have, something bad happening. And then the thing is that whatever effort that you have actually put into setting up this company is right now put on a fire sale.
Yeah. And I love the way you say no one likes to buy insurance. I think anyone within
Correct.
the industry knows that,
Yeah.
number one, insurance is a very emotional decision rather than a logical one. It should be
Right.
logical, but it is emotional.
Yeah.
And yeah, it's finding the right reasons for people to buy. And as Ray's mentioned, in the high net worth world, insurance nearly always has an immediate value. It's a collateral. I think a lot of people look at insurance and go, I'm just putting good money after bad. They think of it in the
Precisely.
same way as
Right.
car
Right.
insurance or
Yeah.
something that's annually renewable.
Yeah.
And in the high net worth world, it's not. It has an
Yeah.
immediate value. The bank will lend you money against it. You could surrender it down the line and often get back more than you put in. And it's just, you've bought time, and that if something happens to you in the interim, that insurance is going to take care of all the liquidity needs of the family and the business.
Because clearly, financial stability is a family's top priority. They also have their fears and worries. And with all these, have they really done their financial planning according to this?
I think hope and fear is a very good place to start, right? In fact, the thing is that, I remember about 2 years back, I did a sharing in North Asia. And I was actually talking about a survey that was actually done by a financial institution. And, what was surprising is that if you talk about those entrepreneurs that is, from North Asia, many of them are the founding generation. So they are the one that actually creates the wealth. So if you ask them what's on their mind, it's never about succession. It's about, okay, look, how can I actually continue to grow my business, right? And if you compare that, survey results with those of Asia, a lot of Asia family, meaning the Southeast Asia, which we have seen, maybe wealth in that is going into the third generation, fourth generation, they have actually experienced some of the pains in terms of this wealth transfer. They know how family dynamic may actually cause a lot of issues, right? When it comes to the North Asian entrepreneurs, that is something that is way at the back of their mind. It's not a priority.
Yeah.
Why?
Yeah.
Because they have not experienced that. But very soon, we will approach the time whereby they will start to actually experience this as well. And we have, in fact, seen many of such case studies, such examples, real life examples about that wealth transfer, right? So hope and fear, that's what we always talk about, right? And we are not here to sell. We are here to provide options.
Yes.
Again, many times I have actually gone to events whereby I've shared some, examples and all that. And quite often, after the session, some young family members will come up to me and say that, Ray, I love what you're sharing, but who's going to be the one that is going to bring up this topic, right? It's never easy. I like what you said earlier. If I'm going to be the one that is going to bring up this topic, am I going to go to the bottom of the list when it comes to the beneficiary?
Right.
How am I going to be impacted?
Yeah.
Right. That it's a very real concern.
Yeah. And I think that there's a very human element to this
Yeah.
as well.
Yeah.
When we talk about insurance, when we say no one buys insurance, one of the reasons behind that is when you buy insurance, you are tacitly acknowledging your own mortality. And a lot of these, very much the older folks who started the business, they've had everything under control the whole of their lives. They've run this business. They've been successful. They've got the family. They've done everything. For them to talk about insurance means that they've got to sit there and acknowledge the fact that one day they're not going to be here anymore. And they do not like having that conversation.
Yes. But with all of these insights and also how-tos, and how do they really break the curse?
By having good advice. And Ray said something else that I liked. Insurance is part of the solution. It's not a silver bullet. It's not going to fix everything.
Right.
You've got to have the right structures.
That's
You've
right.
got to have the right family constitution,
Right.
which I think is something that a lot of families do not do. By setting up a trust is just another tool. Insurance, creates liquidity, great, more money. But what are you going to do with it? Families need to meet with, I would say, a third party,
Yes.
a lawyer, whatever it must be, around once a year, whereby first gen can say, here's the values that built this wealth. Here's how we got here. And share that with the younger generations. And it's not just about wealth generation and preservation. It can also be about giving it away because there's a lot of philanthropy and charity work that happens with these Asian families. They don't like to talk about it, especially the older generations.
Yeah.
Don't talk about it. It's just something they do. But if the families don't get together regularly and talk about this, those values will be lost. And as soon as you lose the values, you lose the money.
Oh, I see. And let's pivot to the bright side. Ray, with your extensive experience in Asia, a lot of the families that we have served are actually having conversations with us right now. But you've seen success cases, fourth generation carrying on to the fifth and all. What are they doing differently?
I think they have got a very clear strategic intent. That doesn't come about naturally, right? A lot of it is through many rounds of discussion, many rounds of getting to know what each and every family members want, and then from there developing a roadmap, right? And it is not a exercise whereby you kind of like can do just once and then lock it up and say, okay, it's done. In fact, the thing is that it's a continuous refinement process, right? Families that has been able to pass on wealth do so in a very systematic way. Maybe there is an annual family meeting, maybe it doesn't have to be done annually. It can actually be done periodically, maybe once every 2 years, once every 3 years, when there is some significant change, right? And these are the kind of things that makes the family wealth, put the family wealth in a very good position.
I see. So it's more about continuity.
Yes.
It's not just a transfer and that's it, but continuity and alignment. Do you agree?
Yeah, I would break it down into 3 things. There's ownership, there's control, and there's who benefits. Now, Ray mentioned about having the family bank. And again, if we talk about the Rothschild or someone, there is literally a family bank. But I think in our more everyday experience here, you'd be talking about trust. So you have a lifetime family trust. There's your ownership. So the beneficiaries don't own the money.
Yes,
the trust
that's right.
owns the money.
That's right.
You then have a small group within the family and external advisors who will control who gets what, when they get it, how they get it. Is the money that people receive from that trust conditional? So do they have to exhibit certain behaviors?
That's right.
A really common one, and I've mentioned this to many clients in my time and they love it, they've never thought of it, is matching. So what you don't want is a child to grow up as what in the UK, we like to call them trustafarians, right? They grow up on the basis they're never going to work. They're just going to feed off this trust. Right. And one of the easiest things to do is have a conditional payment from the trust that says, for every dollar you earn yourself, the trust will match it. Okay. If you want to sit there and do nothing, you will receive nothing. If you want to go out and work hard, you'll get money.
And that's how the dead man can talk from the grave,
that's
right?
That's
right. That's
exactly.
Right. That's right.
So you've then also got to think of it on a systematic basis. There's a lot of fear around poor marriage choices. So you could be in Gen 3, 4, someone marries into the family, they divorce, they sue the family, not the spouse. And all of a sudden the whole family's money is at risk. So again, these structures, having the right control mechanisms, very, very important.
Here at the Grandtag podcast, we like to give our audiences a bonus. With all the insights, the valuable sharings that you have given, we still want to give them more. If you have something that you want as a key takeaway, the one and only thing, if they were to forget everything that we've discussed today, what is that one key thing that you want them to remember and take away with them, Ray?
Well, for me, I've been doing this thing for quite a while now. And what is actually very deeply ingrained in me is that passing on wealth is a heavy responsibility that should not be taken lightly. Start planning, and so that you can actually start refining along the way, right? And the sooner you do that, the better it is.
Thank you. Yeah, Chris?
I would echo what Ray just said, that there is a saying about the burden of wealth. That when you reach a certain amount, having that money is no longer a pleasure, it's now a burden. I think just because obviously I'm coming from an insurance perspective, cash is king and liquidity buys you options. It buys you time. So I think where insurance will be a part of the solution, it's a very, very important part for giving the family options to work out what they want to do.
Thank you. Thank you, gentlemen. It was very insightful discussion, and there's a lot of key takeaways.
Thank you.
Thank you very much, Barbara.
If today's conversation teaches us anything, it's this. The 3-generation curse isn't inevitable, it's preventable. But only with intentional conversations, structured planning, and shared responsibility. Legacy isn't about avoiding loss, it's about preserving purpose. My sincere thanks to Ray and Chris for sharing your insights. And to our listeners, if today's discussion resonated with you, perhaps the next step isn't another investment decision, but a conversation at the family table. Love today's discussion? Subscribe to the Grandtag podcast on YouTube and Spotify so you never miss an episode. Follow our socials for your daily dose of practical wisdom on wealth and legacy. I'm Barbara, and this has been the Grandtag podcast, Conversations on Wealth and Legacy. We look forward to having you with us in our next episode. Of the Grandtag podcast, Conversations on Wealth and Legacy.